Hi, Mike Campos here. Thanks again for the opportunity to share information with you through this webinar. If you have any questions or would like to get started in the loan process, please feel free to reach out to me direct, and I look forward to talking to you soon. Hello and welcome. I look forward to sharing the steps to home ownership. I'm just going to jump right into it, and please feel free to reach out with ask any questions or reach out to get started. Look forward to educating you the best I can. A little bit about myself and my company's core principles. We love doing the right thing and doing it right the first time. We love being transparent and being as upfront as possible. We are a nationwide mortgage lender, and we're located in multiple states under different brands. Home Service of America is a Warren Buffett company. And myself, I've been in the industry for a little over 16 years. I grew up here in San Diego, and I love real estate. I love negotiating escrows. I love finding ways to create solutions for home buyers or refinancers to get their loans approved. I work a lot with first-time home buyers and jumbo buyers, and I have experience in underwriting as I worked for a major bank for a number of years as an underwriter. And I'm really happy to be on this side to share my knowledge to my customers and make them empowered to make the best decisions for themselves and their family. Living here in San Diego, we all love the coast. A lot of us have rented for many years on the coast and love that lifestyle. But as we know, the rents have been on the rise and property values on the coast is extremely high. I found a really cool article in San Diego Magazine a little while back that kind of shared some of the other great communities that San Diego has to offer to kind of show that, to show you that there is low consequence to moving away from the coastline because there is just a lot more out there to San Diego than just the beach. As you continue to pay rent, I know that the rents have been on the rise. The news has been very clear about that. A lot of my clients have been clear about that as well. And it is a motivating factor because your monthly expenses are basically on an increase as long as you continue to rent. So what is the benefit of becoming a homeowner? You're building equity by paying down your mortgage debt and creating equity that way. You can lock in your payments, and now you know exactly what your budget is for the next 5 to 10 years. You have interest deduction on your tax returns to pay Uncle Sam less and less than you're probably accustomed to. And you're in control of your own property. In essence, you can remodel it as you see fit, pick your own paint colors, and have some pride of ownership. It's a really beautiful thing. It's the American dream. On the loan side, I am all about the numbers. I'm very mathematical and methodical about how I work. I like to inform my customers the best possible. And ultimately, I'm happy to do an analysis for you to show you, to compare what your rents are today compared to a mortgage payment of the future, and what kind of benefits that would provide to you in becoming a homeowner, in addition to being able to be in control of your own domain. So a lot of people have been on the sidelines because they hear a lot of negative things about PMI or having a high payments or just been on the sidelines because they want to save 20% down payment because that's what grandma and grandpa said that you had to do. In this marketplace, there are a lot of programs out there that offer low down payments, and the consequence for moving in today versus a year or two from now is very, very low. And in this side-by-side example, I'm showing you the difference between a 3.5% down payment FHA loan and a 20% down payment conventional loan. And as you can tell, it looks very easy to save up the 3.5% down compared to the 20% down. And by buying today, you also lock in today's lower interest rates compared to what's forecasted in the future. And the penalty, as far as the monthly payment is concerned, is very reasonable. For an extra $500 a month, basically, you can move in today and lock in today's low rates and start creating a tax write-off today, and also get your equity position to grow as the market continues to appreciate. Now, for that extra difference in monthly payment, amortized over 12 months, being $6,400, now that you become that homeowner for that 12 months, the appreciation in your property has gone up at least $21,000. This number is based off of a 4.7% appreciation rate, and for San Diego, that's a very low figure. So you're going to have great gains in home ownership over the next number of years, and we're basically showing you a very conservative number today. By going into at today's interest rates, we are anticipating that rates are going to go up. Fannie Mae, Mortgage Bankers Association, National Association of Realtor are all forecasting an increase in interest rates. And by standing on the sideline does have a negative impact on your future affordability. So as your rents go up, as you stay on the sideline, your rents are going up on a monthly basis, and the rates are going up, making it more difficult to become a homeowner. In this example here, you can see that a half a percent interest rate increase has a negative impact on your loan amount by $25,000. So either one, you have to look at properties that are $25,000 less than today, or two, you have to come up with an additional $25,000 in order to stay at the same monthly payment. So, our suggestions is to consider looking at buying real estate today, becoming a homeowner today, to lock in your rate, control your monthly expenses, and start to watch that appreciation move forward. So what are the steps to home ownership? One is to talk to a lender first about getting a pre-approval, not a pre-qualification, but to get a pre-approval, identify your qualifications. If there are any challenges or issues on your application, resolve them today so you can move forward in the very near future. After you're pre-qualified, you'll know your budget as far as purchase price, your total monthly payment, and how much cash you have to come out of pocket in order to make a transaction work. And as long as you're comfortable with those terms, you'll move forward with a real estate agent to go start searching for properties, to write an offer, and to ultimately get house keys. I created this little spreadsheet here a little while ago to kind of show you how the realtor and loan officer both kind of work together as a team to help you accomplish your goal. There are a lot of steps in the purchase process with regards to getting a loan, and there are also a lot of steps in the purchase process with regards to the purchase contract terms as well. And both loan officer and realtor are there to help guide you through all of those intricacies and to make sure you get to the finish line on time. Most of the time you're writing an offer, you're going into escrow on a 30-day term. So time is the essence during that process. I did emphasize a little earlier about getting a pre-approval. There is a difference between a pre-approval and a pre-qualification. And a pre-qualification carries very little weight in regards to when sellers are analyzing which offer to accept. It is my strong suggestion that you complete a full pre-approval to give yourself a lot of strength and have your lender back you when submitting an offer to a seller to buy a property. There are a lot of people in the back office that help support your loan process and purchase process. There are a lot of different service providers that you'll meet personally during your purchase and loan process as well. So I thought I'd break down a little bit about who those people might be. Myself as a loan officer, I have a associate that works with me. The realtor also most of the time has an associate that helps out as well. The loan processor and mortgage underwriter are people that are involved in helping you get your loan approved. Most likely you would hire a home inspector to help provide to you a very clear report of the home condition of the property. And this home inspection is used a lot of times to possibly negotiate repairs completed by the seller, or negotiate a seller to contribute dollars towards your closing costs, or sometimes a price reduction based off of that condition of the property as it's been completed formally by that inspector. The real estate appraiser comes to the property to identify the value of the home, but in addition to, they are the eyes and ears of the bank. So they also disclose to the bank what the condition of the property is in, who also might have required repair items in order to purchase that property. Um, so when you're getting ready to apply for a loan and to get your transaction fully pre-approved, there are going to be a lot of documents you need to have ready to submit to your lender. They include tax returns, income documentation, asset documentation, and other particulars that might be unique to your circumstances as far as where you live, where you worked, and where you have in the past. We usually cover 2 years employment history and 60 days asset statements. And whatever changes that take place during those time frames are items that the lender would be needing to investigate. So I'm going to jump in here on what loan programs are available that are primarily used by first-time home buyers. Before I do, real quick, I do want to express to you that we do pull your credit in the pre-approval process. We not only look at your credit score to identify which program you qualify for, but we also look at your credit history, what accounts are on your credit report, what lates might have taken place now or in the past, and what number of trade lines you have. Credit history, credit depth, and trade lines are all important factors in getting a loan approved. In a lot of these loans that we offer, you don't have to have flawless credit. You don't have to be perfect. We're all human. We know things happen. Whether it's a small medical collection, maybe a 30-day late randomly, or worse than that, a foreclosure, short sale, or bankruptcy. And it's not that you have to wait a full 7 to 10 years in order to get a loan. These programs, as you can see here, have different wait periods from those derogatory events. FHA, in some cases, will complete a loan for you 12 months after one of these major issues. Depending on the loan size, sometimes you may have to wait the full 7 years. But let's talk about your story. Let's figure out the circumstances, and I can kind of help narrow down which waiting period that you may have to entertain. So different mortgage products are available. We kind of customize each loan and tailor it towards your circumstances and needs. The conventional loan is the Fannie Mae or Freddie Mac loan. It's designed for a quality borrower. If you're a first-time home buyer, they require a 3% down up to a $438 sales price. In a lot of these cases, you can use grant or down payment assistance. Some of these first-time homebuyer loans also allow you to use your roommate's rental payments to you as an income source to helping you get your loan approved. So there's a lot of open-mindedness. There's a lot of outside-the-box thinking with regards to helping you get your loan approved. FHA is one of the most forgiving loan programs available. It lets you finance 1 to 4 units. You can buy a 4-unit property with FHA financing with as little as 3.5% down payment, and you can finance and the other units. Gross rents can also be a part of your loan application to help you get approved. FHA is great for someone who's had derogatory credit that wants to get back into home ownership, and it allows us to create a lot of solutions for you. VA is for active duty and veteran military. VA is a great benefit for those types of people, and you can do up to 0% down payment up to $612,950 purchase price. The maximum loan amount for VA transactions, $1.5 million. There is a unique formula to identifying your required down payment, but it's a great program and offers the best rates for our veteran and military borrowers. USDA loans are available. It's not very common in San Diego, but it is out there. So please, if you are thinking about purchasing in a USDA eligible area, please let me know. If you're thinking about buying something greater than $640 purchase price, you can put as little as 10% down payment. And there's lots of different terms available, including interest only. and we offer great advice onto what programs and products would be best suited for your needs. Down payment assistance is sometimes looked negatively upon buyers because sometimes the process takes a long time to get completed, meaning the sellers have to wait longer than usual to help you, to allow you the time to buy the property. That's changed. The negative stint of down payment assistance is in process of going away. The best form of down payment assistance is a grant. It's up to 5% of the loan amount can be granted to you. You don't have to repay it. There are exclusions, so there are income limits and sales price limits. Let's talk more about it, but we can close escrow on a 30-day transaction with a grant, and it works out well for everybody's benefit.
Hey guys, Mike Campos here. I hope you're enjoying today's webinar. I thought I'd take a little break and chime in and give you a little bit more particulars to see how all these formulas work together as one loan. I've mentioned how credit scores have an impact, your credit history. There are some different loan amount options, and there also is some cash reserve requirements as well. And I just figured I'd just show real quick how that all kind of comes together as one loan package. So real briefly, the conventional loan here has a maximum loan amount of $417,000. In essence, that means that the purchase price is about $438,000 or less for a 3% down payment loan. With this particular loan program, your minimum credit score out of the 3 bureaus that we pull has to be at least 620. And in addition to having a good credit score, qualifying for the loan amount, and putting 3% down payment, you also have to have 2 to 6 months post-closing liquidity, or 2 to 6 months mortgage payments left over in the bank after close of escrow. And that's just something that we will plan with and help you through that and figure out through that pre-approval process to exactly what your financial expectations need to be in order to move forward with buying a property. If you qualify for a higher purchase price, up to $612,950, you can put as little as 5% down payment. The credit score requirement is slightly higher, and the liquidity requirement is also the same as the 3% down loan. FHA is our Plan B loan, so if, for example, you don't qualify for these two products, FHA would be your next option. At 3.5% down payment, they're more open-minded about your credit score and have lower liquidity requirements. Our VA loan is for our active duty military or reserves, or retired military or reserves. And we have a 100% financing loan up to $612,950 purchase price, $0 down payment, sometimes $0 in cost as well, depending on your circumstances. We'll figure out what's best for you. But if you are buying something at a little bit higher price point, the maximum loan amount for VA is $1.5 million. So if you feel that you're going to move to that higher level, let's talk about it in advance. And I hope this helps kind of break down how all these facets play together as one. And I hope you enjoy the rest of the webinar. Enjoy.
So once I go over the loan programs with you in detail, usually I provide an Excel spreadsheet that does a side-by-side comparison of all these programs that you're eligible for. Once we narrow down what's the best product for you, you're comfortable with your budget and so forth, at that point I would issue a pre-approval letter that you would supply to your real estate agent, and that pre-approval letter would be supplied to your realtor and included in your offer letter to the sellers. I will, in addition to, want to find a way to disclose to you all the costs associated with your transaction at that particular price point. I love transparency. I think it empowers you to make the best decisions possible and allows us to work better together to helping you accomplish your goal. I do that with an informal document called the pre-application worksheet. This will break down your total monthly payment. It'll give to you an APR and the total cash out of pocket required in order to purchase at that particular price. If this particular price isn't the right one for you, with your feedback, I would be providing to you an additional document that would be tailored closer towards your needs and your comfort levels. So at that point, you're ready to write a purchase contract. I do communicate with you and your realtor of choice to make sure that everybody's on the same page to how aggressive of an offer you can supply the sellers to help create more attention on your offer versus the other Jane Doe or John Does that might be submitting an offer on the same property as you. When I review those terms with your realtor and you, there are a few things that are kind of needed to be avoided when you're submitting an offer. Um, these missing, incomplete contracts, inaccurate contracts, cause delays in the loan process, taking us further away from being on time. But two, it sometimes might create concern or doubt in the sellers that you are the right buyer for them. So if we can avoid a few of these items, it allows the process to be more streamlined and to have more confidence in the sellers that you're the right choice. A big thing that's always kind of talked about is that the sellers pays the buyer's closing costs. This is an allowable thing. This is a negotiable term. It's not required that the seller pay your fees. It's a negotiation with regards to that. And depending on the strength of the market and where we're at with regards to the market would kind of determine if it's a reasonable request or not to have the seller pay closing costs. Depending on the loan program that you choose would determine whether what dollar amount the sellers are authorized to pay on your behalf. So once you submit your offer, it gets accepted by a seller, the loan process starts. Traditionally a 30-day escrow, but here with my company, we're pretty aggressive and are closing escrows in 15 to 21 days. There are a lot of steps involved, but this simply kind of shares the general overview of what steps take place during the purchase process until closing when you get house keys. Once you're in escrow within 3 days, federal regulations require us to send a formal written estimate of your terms, closing costs, and total cash out of pocket. This is called the loan estimate, and it's standard for the industry, and every bank offers the same document in the same format, giving you the ability to easily compare offers from different lenders and to identify simply who's the best choice for you about your loan process, loan package. 3 days before you're allowed to sign loan documents or close escrow, we send out the final closing disclosure. These are the final figures with 100% accuracy, and this is the document that you would use to wire your cash to close to the escrow company. And then after this document's signed, 3 days later, we issue loan documents for you to sign and ultimately close escrow. So what can you do to help provide to yourself the most pleasurable purchase and loan experience? 1, make all your payments on time still. Don't acquire additional debt during this process. Communicate with us about unique things, your insurance, any new bills that may be coming up. If you have to take maternity leave or if you need a medical procedure, please let us know so we can advise appropriately how that may or may not impact your loan process. Things not to do before and during the loan process includes major purchases that might create an additional monthly payment that could impact your monthly income to expense ratio. Paying off any loans with cash that's not traceable, or depositing cash that's not traceable into your bank accounts. Having your credit pulled by another creditor without us knowing can create additional work and question with regards to your loan approval. You are allowed to seek new employment if it's better a job for you. We're not going to stop you, but we just want to know what's going on so we can structure your loan application appropriately and make the appropriate adjustments, because in the mortgage process, it's very paperwork intensive, and as long as we can connect the dots, everything will be all right. If you do have any other questions about the loan process and how we can best help you become a homeowner, please feel free to reach out. I really look forward to the opportunity to serve you, and thanks again for attending.